Hello, good weekend to all. It's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about the services and free products, just visit CFDS.com. Okay, there is also the educational website where I constantly update charts and provide latest market insight and analysis with my videos posted there too, which is www.cfds.education. Okay, let's start with regards to European indices. I've already discussed the fundamental side of the Brexit scenario situation in my FTSE analysis video, so I'd certainly encourage you to listen to the first half of that and you'll understand my my position. My position or my expectations, reading between the lines, and I may well be wrong on this, but that's the market. My stops obviously are in place. My interpretation is that they are going to vote yes. I won't say resoundingly, but enough to see the back of Mr. Tsipras and Mr. Varoufakis, who I think personally are dimwits and basically have no clout, absolute amateurs from my opinion. I think if they had a more competent leader, the deal would have been done by now, okay, and Greece would be on the road to prosperity, but obviously that's not the case at present. It's especially when you're accusing the IMF of being a terrorist. I mean, I think you've certainly gone too far, and you're bordering on the verge of extremism there. And extremist parties are no good for, are definitely not good in terms of any type of resolution or any reconciliation or peace going forward. Especially given the fact that there was I actually retweeted earlier that the Communist Party certainly have a strong roots in the Syriza party, so in the actual party of Mr. Tsipras. So it's certainly is a real predicament, and they are certainly utilizing propaganda as well, which I don't think is very nice, and I don't like that when they actually try and twist things, because it's very clear that the vote that they're trying to go ahead with on Sunday indicates that they're going to leave the Eurozone or they stay in the Eurozone, and they have obviously twisted it as it's going to mean obviously a better conditions of a bailout and vice versa. So that's not the case. The case certainly is very clear, and Miss Merkel has made it clear as well. The creditors have made it clear as well. The vote on Sunday is whether you want to remain in the euro or you don't want to remain in the euro. Okay, that doesn't, and they've obviously twisted it and utilised propaganda and so on and so forth in selling the actual vote on Sunday as being one of rejecting the current bailout and obviously fighting for another bailout. And unfortunately, the EU and the creditors have already stated that they're no longer, although they will not get access to a deal or as favourable as the one that's already been proposed. So after the vote, even if they do vote yes, then the deal itself certainly will not be as good as the one that's already been proposed prior to the referendum, because by calling the referendum, they've certainly caused a lot of schism, a lot of uncertainty, etc. throughout the whole Eurozone, because next is Spain, the next comes Italy, and so on and so forth. So everybody attempts to obviously cause discord, etc. And it's just the uncertainty and the credibility, and Europe remains vulnerable, and so on and so forth, the whole Eurozone project. So you don't, and given the fact that today they obviously are bickering and crying over current bailout, they could do this again in 5 years' time. You lose that trust, okay? So that itself is obviously negative for going forward. So, and given the fact that the exposure to the Greek situation certainly is at a minimum, and yes, there is going to be a potential damage short term, but long term, given the fact that if they do have a Grexit and the Europeans let Greece go, it may well be of benefit to them as well. Although the military basis side of the equation, if I find it very hard for them to let Greece go, from my understanding. So I expect the yes vote to reign supreme. Mr. Varoufakis' exit and Mr. Tsipras' exit will mean a more amicable relationship, and therefore a deal will certainly get done, and this will all be in the background, okay? Everything else will start to, especially the equity market, will start to rise. Now, from that perspective, I mean, if you look at it from that perspective, I personally think this is all noise. That's my interpretation of events. I think it's all noise. The reason why I think it's noise is because the news that's come out of China with regards to their stimulus project, and given the fact that the government is involved now to prop up the equity prices, is a form of QE. So the fact that the Chinese markets are basically looking to be artificially propped up, that alone will neutralize any negative effects from Greece. So therefore it's risk on, from my opinion. So Chinese stimulus stroke QE, okay, because they're going to invest 19 billion or up to $1 trillion in terms of the equities, and obviously force the equity price is higher, which will send Aussie USD higher. Now let's just look at the chart of the Aussie USD, because this is going to be interesting in terms of the actual Chinese intervention news. Okay, so let's bring up chart the Aussie. Let's bring up this is a chart. This is a trade that I'll be taking from the outset on Sunday night. I'll certainly be entering this trade, although it does certainly seem vulnerable on a daily chart. But from my perspective, given the fact that weak economic data, and this has already been weak due to the uncertainty from the Greek or Grexit scenario. Also, there was some news about a big, massive copper short being liquidized and basically liquidated, should I say, and that itself is a very key sign as well. So, from my perspective, I will certainly be looking to buy the Aussie, from my understanding and my interpretation. Looking at a weekly chart, okay. Has broken all support on the weekly chart, so that's certainly something from a technical perspective one needs to be concerned, but from a fundamental perspective we are okay. Okay, so going to a weekly chart here on the Kiwi, obviously we're getting flushed here, we are into approaching support in this zone here. Historically we had support here, so certainly a support zone on a weekly chart. Daily chart, obviously we're in this bearish flag. I mean, it certainly seems as one could argue that all the bearish news has certainly been factored into the Kiwi. Can it go any lower? Okay, so from a daily chart perspective, that certainly remains the case. 60-minute chart, we failed to make a lower low, even with the Grexit scenario going into the weekend, the uncertainty and so on and so forth. And the weak US data will obviously propel the Kiwi higher, along with the Aussie as well. So this is basically where we are. Now we're looking to potentially move higher. That's my interpretation of events. So certainly weaker dollar, given the fact that you got a risk on scenario, and obviously the Kiwi and Aussie propelled higher due to Chinese data. Okay. Now that's a scenario from terms of economics or social, or should we say geopolitics and socio-economics. The other factor as well is that economic data at the Eurozone was relatively stable last week, and certainly argued for a risk on scenario. Now let's have a look at the actual indices themselves. Okay, so the German DAX. Okay, on a weekly chart, obviously we have flushed quite substantially, and that pivot's low doji has certainly held. Okay, from last week or 2 weeks ago, given the fact that obviously the situation this week, especially with regards to Greferendum and the Grexit. Okay, we've obviously held double bottom on the daily chart as well, so double bottom support certainly has held. And especially going into a Friday, we did not make a lower low. Okay, so again that's a bullish scenario. Going to a 60-minute chart of the German DAX, is I was expecting a inverted head and shoulders formation on the German DAX, but given the fact that we've still held a fib 75% right shoulder, I still expect this to move higher and obviously close the gap above at 11,500 and potentially take out the new highs as well eventually, as the Greek or Greece scenario certainly gets put back. Okay, and certainly goes into the background, just like Ukraine and Russian situation has gone into the background, and markets start to focus on other variables or other incidents. Okay, so I'm certainly expecting a potential thrust higher. Obviously, if the yes vote does not gain steam and the no vote is obviously successful, then it creates a lot of uncertainty and so on and so forth, and then we are looking to potentially test that 10,800, possibly 10,800 and lower even. Okay, but again, it's up to the market, and the market will dictate. But that unfilled gap above certainly remains a target on the 60-minute chart for the German DAX. The 10-minute chart, again, you do have an unfilled gap below at 10,945. That certainly needs to be observed. But given the fact that the market was setting up for a potential inverted head and shoulders, okay, going into the Friday, and I am expecting the markets to break out this bearish channel, obviously putting a higher low, and obviously create this inverted head and shoulders formation, and for certainly looking to propel higher. You have resistance at 11,250, 11,300, and then eventually that target 11,500, which is gap fill, certainly needs to close, in my opinion. Okay, based on my understanding of events. Now, what's the situation in terms of its pairs? So we always look at its pairs and see what the pairs are doing. So the S&P 350 again is at double bottom support on the daily chart. So again, that supports the thesis that the German DAX is going to propel higher. The 60-minute chart obviously is building a base in this region, and again is looking for a potential move or a thrust higher. We did have the inverted head and shoulders formation on the S&P 350, left shoulder, head, obviously right shoulder. We've obviously failed to propel higher because that obviously has retraced more than 75%, and again is coming into horizontal support. So again, horizontal support remains strong here. All the Grexit scenario fear, certainly from my perspective, has certainly been factored into the equation. Okay, again the FTSE Europe as well. If I just bring that up and show you again another indices, again we're into that gap fill support, and the important factor is in that green candle that we had on the 1st of July has held. So the markets have obviously consolidated with that green candle, obviously at gap fill support, and therefore one would argue that we are looking to obviously propel higher. The same scenario again with regards to FTSE S&P 350 Europe is the fact that we've had an inside bar on this green candle, which is a bullish engulfing candle the 1st of July at horizontal support, and therefore we're looking to propel higher to 1640 region, which again supports the thesis that the German DAX will move higher. Okay, the French CAC now. The French CAC. Okay, so if you look at the French CAC on a weekly chart, first of all, I'll give you an insight there. Again, it's a doji. Held fib 38% resistance, so therefore looking for a move higher or propelling higher. The daily chart again closed that gap below, so that was an unfilled gap that needed to close. So again, this is a scenario where we are going to propel higher, given the fact that we are into horizontal support. Okay, you have an unfilled gap above that needs to close at 5050. Therefore, given the fact that the ECB is implementing additional tools and stated that any spillover effect, etc., they'll create a firewall, that's bullish. Okay, the QE side of the equation is bullish because European equities are always a buy and dip from my perspective if you have the QE in the background. Add in the fact that the Chinese are now doing a stimulus or a QE which will help propel its stock markets higher. That's obviously positive for risk, positive for commodities, positive for risk FX, which is Aussie and Kiwi, and therefore that would be interpreted as being bullish. Also, given the fact that the Greek situation, from number one, all the bad news is already baked into the cake, so it's more about selling the rumour, buying the news type event. That's basically what we're expecting on a short squeeze. Okay, and that's the scenario. Okay, and the no vote, will it win? No, not my personal opinion. I think the wise Greeks or the educated Greeks or those with common sense can see through the series propaganda, and certainly will come to vote yes and to remain in Europe. Okay, right, so the French CAC, like I said, is certainly into a bullish potential position or scenario. Inverted head and shoulders formation I was expecting to play out, obviously that failed, so again we're into that horizontal support and looking for a potential higher low, looking to close a gap above on the French CAC. The 10-minute chart on the French CAC had an inverted head and shoulders formation. We closed the gap below at 4790, and as you can see here we have this bearish channel and looking to break out. Whenever you have and also given look at the uptick in volume, if there was fear of this vote, if there was fear of a Grexit scenario, why would the volume increase? Think about it. Okay, and yet the market still failed to make new lows. Okay, so we held that gap, market bounced, buyers came in with some ferocity, as you can see, volume upticking. So again, inverted head and shoulders, so it's no coincidence. Okay, it's no coincidence. Okay, so again, French CAC position bullish. Eurostoxx. Okay, Eurostoxx. So if I go to my weekly chart, the Eurostoxx, again we've obviously held that fib 50% pivot low. This week we did not make a new low, therefore the buyers, from my perspective on a weekly basis, are obviously gaining some strength here. Daily chart, horizontal support has held. Okay, you have the unfilled gap above, so that's acting like a magnet to close in terms of price action. 60-minute chart, I was expecting an inverted head and shoulders. Obviously the right shoulder fell even further, even with strong economic data, but that was given the fact that China was down minus 5.5% overnight. Now that Chinese situation equation has certainly changed with the QE stimulus, this should certainly look like it wants to go in the opposite direction. Okay, given the fact that you have an unfilled gap above, so therefore we're looking for that to close. 10-minute chart, same formation on the French CAC, German DAX, etc. Close the gap below, and now has an inverted head and shoulders formation, looking to propel higher. Okay, that's a scenario, that's a situation with regards to the actual European equities, and I personally expect them to be positioned in a way that they certainly obviously want to go higher. Okay, to go higher. Okay, so French, German, or bonds, should I say, bonds. Okay, so the bonds themselves are positioned, as you can see here, looking for confirm this here. Just throw in my levels. Obviously you're looking for a potential break here or breakish scenario, looking for a potential thrust higher, and that will obviously force the yields lower, and obviously the bonds move higher in tandem with the actual European equities. As you can see here, has failed to make a lower low. Okay, has stabilized to a large extent. Okay, certainly has stabilized to a large extent, and now looking for a potential move higher, which will send the yields lower, and obviously fears decreasing. As you can see here, a type of inverted head and shoulders formation. Okay, that's basically what we're looking for. I'm looking for a potential thrust higher up to the 155 level, which obviously the bonds move higher, the yields move lower, and therefore it's a risk on scenario, etc, etc. So this certainly supports that thesis as well. Okay, right folks, I think that's a wrap. That gives you an insight into European equities and as to why I'm looking for a potential move higher based on what the market is telling me. I'm not listening to anything else. Everything else certainly is noise to a large extent, but although we have filtered through that noise, and given the fact that the stimulus from China certainly negates it, the strong economic data certainly negates it, QE and additional stimulus or tools that are going to be required and that can be exercised certainly negates the concerns from Greece. And although having said that, it's all baked in the cake, given the fact that the markets are down quite substantially already. Okay folks, so it's all about on this occasion, when the markets are selling off, you sell on the rumour, you buy back on the news or confirmation, and that's exactly what we're expecting. Okay, risk on, risk off, wax on, wax off. Certainly be sure to check out the website at cfds.com. Open an account with them and utilize their services. Certainly recommended. Also www.cfds.com for education. Education for all my latest analysis, charts, etc. I have updated them now, so all the European charts are updated. So be sure to check them and certainly get them updated. Goodbye now.